Hello everyone, welcome back to Upside Down Data. Today I want to talk about Ethereum and why I think it is far too early to say that the king is dead. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So what I'm showing you here in this initial graph, just to give us some context before jumping into the main thing I want to discuss today, is the price history of Ethereum color-coded based on the output of our risk indicator, the upside downside potential indicator, or UDPI. So I'm showing you here the price action of Ethereum. Each dot is a day, and each day is color-coded based on the output of our risk indicator. 5 high risk, -5 low risk. And you can see that this indicator does a good job of identifying these low risk and high risk times in in Ethereum's history. Now, one thing I think is interesting about Ethereum relative to some of the other assets that we follow that we have UDPI indicators for is that Ethereum seems to like to spend quite a bit of time in these kind of higher risk areas. We can kind of see this more clearly if I show just the raw output of the model. You'll see a lot of time gets spent above zero. And from the model's perspective, anything above zero is when the upside potential is lower relative to the downside potential. There's more plausible room to the downside than the upside. And so one way you can interpret scores above zero is that it's risky, right? If the asset has more or more downside to realize than upside, then it might be more risky because that means there's more room for it to plausibly fall than for it to plausibly appreciate. But one other thing that kind of pieces of information that you can get from this as well is just to think about how if an asset is just constantly realizing its upside potential and not spending a whole lot of time realizing its downside potential, that would manifest itself as being above zero, right? If it's consistently pushing to the upside and claiming that kind of upside potential that might be there, and it's not going down and claiming that realistic downside potential, that could be a sign of a well-performing asset across time. And certainly when we look at Ethereum and what it's been able to do over its lifespan, it's one of the most impressive, crypto assets out there. It's done extremely well from its inception, and it continues to do quite well. Even in this recent market pullback, we can see that Ethereum, it's had a correction, but it's nothing compared to what some other assets have been doing, and it's actually been holding up quite well during this. And so it seems like Ethereum kind of has this tendency to realize a lot of its upside potential and not spend tons of time realizing its downside potential. We'll get these dips down into these really low risk zones, obviously, throughout time. That certainly happens. But it also likes to spend a lot of time up here. It likes to spend a lot of time realizing that upside potential that the model it thinks is possible. And in fact, dipping down as we are now into the negatives for Ethereum is the first time Ethereum has done that since the summer. It's spent a whole lot of time up here and then back coming out of 2020, spent a whole lot of time above zero as well. And so it's certainly been performing quite well from that perspective. Now, one thing I think is interesting then to consider if we see how well Ethereum has been performing through its lifespan, I think a question a lot of people are asking is, will it be able to continue this pace? And I think something that I've seen a lot of is kind of more and more talk about how people think that Ethereum's days are numbered, that this kind of impressive run that it's had, that these other alternative layer 1 protocols are going to now come out and start eating its lunch, are going to start taking kind of dethroning the king in a way. If Ethereum was kind of the main layer 1 smart contract platform, that these other ones will come and start eating its lunch. So for example, this is not to throw shade at Kashka or anything by any means. I think she's a brilliant commenter on crypto markets. I recommend you follow her if you're not currently following her on Twitter. But I think this tweet that I found that I came across when I was just scrolling through Twitter kind of amplifies what a lot of people are saying about Ethereum right now. They're saying that no matter what Ethereum has planned for the future, these other layer 1 protocols have it in its sights, that they're already delivering all the things that kind of this next upgrades of Ethereum are promising, and that essentially Ethereum has kind of run its course, that these other ones are going to take over its market share, and that Ethereum's decline might be coming up. Now, I don't want to be putting words in Kashka's mouth. I think she's not necessarily fully bearish on Ethereum or anything, but this is something that she talks about a lot, how these alternative layer 1s in her mind are going to do quite well. And from my perspective, I first want to say, I'm not bearish on alternative layer 1s by any means. I'm not an Ethereum maxi. I think they are going to do quite well. But what I want to argue now is that I think it's a little bit too early to really be putting the nail in Ethereum's coffin. And there are a couple of reasons why I think we should be hesitant to do that immediately. So one thing I think that's just important to keep in mind with this is just to remember that Ethereum really is the king when it comes to DeFi and total value locked on DeFi, and a lot of other things. NFTs also, Ethereum still is the dominant kind of force. If we just look at the total value locked on Ethereum relative to other alternative chains, just look at this. It has, as we're recording this, I pulled this off of DeFi Llama, a little over 62% of all of the value locked in DeFi. It was around $150 billion, and the next highest one when I last checked was Terra Luna, coming in around 18 billion. That's a huge gap, massive gap. Now, obviously, what some people point to is this trajectory here, where they're saying that Ethereum is losing market share in DeFi to these other assets, these other platforms, and that suggests that could be a bearish signal, and certainly that could be the case. But I think you could also frame it the other way. You can say, yeah, that's true, but look at how much of a market share Ethereum still has. And now, if nothing were to be changing about Ethereum, there might be no reason to think that this trend isn't going to change anytime soon, right? If Ethereum was going to stay in its current kind of setup where the transaction fees are very high, few people can really afford to be transacting on Ethereum regularly or really afford to be using DeFi on Ethereum, except for people who have a lot of money or moving a lot of money around to make those high transaction fees trivial in the context of the amount of money they're moving. If nothing was going to be changing in the near future, it could be reasonable to expect that this slide in market share will continue. But we know that that's not necessarily the case, that there are pretty big upgrades planned for Ethereum that might change the ball game a little bit and change this dynamic around. So one of the things that is up and coming with Ethereum down the line is this idea of sharding. So once they transition Ethereum to Ethereum 2.0, so it'll be a proof of stake network, and one of the upgrades that they are planning is to introduce sharding, which basically lets you kind of split the chain into these smaller shards that allows for better scalability. And with that scalability comes better throughput. You can handle higher capacity. I think I've seen numbers that they're hoping to get Ethereum up to around 150,000 transactions per second, which is far, far, far better than what it is right now. And actually 150,000 transactions per second rivals any of the alternative layer 1 protocols pretty well. So that's one thing that's coming, and that should lower transaction fees quite considerably. If you can handle that many more transactions, there's no need for these obscenely high gas fees. There's less competition for getting into a given block if there are all these different shards that are all simultaneously processing transactions at such a high rate, and that could really start bringing the cost down. Now, would it bring it down as much as some of these alternative layer 1s have? I don't know. That's yet to be seen exactly how far it will fall, but it'll certainly be a lot lower than it is right now. And I think one of the important things with that is if transaction fees really are one of the key things keeping people out of Ethereum and maybe leading them to some of these alternative layer 1 protocols, if that issue were to be mitigated substantially, then it becomes a different ballgame, right? It becomes a different question of would people necessarily be avoiding Ethereum as much, or would they just go to it because of how much development currently sits on Ethereum? Ethereum is the most developed chain for DeFi right now. There's tons of options. They're established, so they're probably less risky. They're unlikely to be scams, or for there necessarily to be the code might be more audited and more trustworthy than some of the more kind of newer projects that are launching on alternative chains. You can just do a thought experiment yourself. If Ethereum actually had really cheap transaction fees, would you just necessarily avoid it for other chains? Maybe. That's totally possible. Maybe they're just program or platforms or decentralized applications on other platforms you prefer to anything that's on Ethereum, so you would anyway. But for me personally, I would see doing DeFi on Ethereum being a lot more attractive of an option if its transaction fees were lower. And there's a lot of platforms on Ethereum I probably would want to try out if the transaction fees were significantly lower. But because they're so high, it's kind of hard to just dip your toe in. You really have to kind of commit to make that transaction fee worth it as it currently sits. So that's one thing that's coming. Now, again, the thing you always have to keep in mind with this is that these upgrades have been planned for a long time with Ethereum, and they keep kind of pushing back when things are happening. And so one argument you can make is that this will just all come too late, that these other layer 1 protocols will have had enough time to really kind of take over the market share. And by the time Ethereum is able to implement these upgrades, it'll be too late. It'll already have lost its position. That's obviously possible. But it's also possible that won't happen. Ethereum will have time to get this going, and that could kind of change the dynamics a little bit. And there's other things about Ethereum that I think are important to talk about as well, in terms of just more about the tokenomics of it. So this is more kind of about adoption and use of Ethereum relative to some of those alternative ones, and how this implementation of sharding could really kind of help bring smaller, more retail investors, people with smaller amounts of money, make Ethereum a more attractive option for things like DeFi. But there's also the additional factor that's been introduced fairly recently in the summer of EIP 1559. And if you're not familiar with that upgrade that went into place in the summer, it basically added this mechanism where part of the transaction fees would get burned. Every transaction that happens, a little bit of that will actually get burned and just taken out of supply. And that's Ethereum that's permanently gone. And as I record this, almost 1.3 million ETH has been removed from circulation through this mechanism. And really what this is doing from a tokenomics perspective is it's creating a deflationary pressure on Ethereum. New Ethereum gets created every single block that occurs, but this is now adding kind of a counterforce. That instead of Ethereum just being kind of a totally just inflationary asset that just new ETH gets entered into supply and there's nothing that's necessarily built in to drag it out, this is actually pushing a deflationary pressure on it. And one of the things that can happen when you have a deflationary asset is that if a lot of that asset is getting held by strong hands, people aren't really all that willing to sell it, then you get the demand fighting over a smaller and smaller amount of supply. And when that happens, it can really drive price up quite rapidly. If there's only a small amount of supply that's there to be sold and a lot of demand coming in to sell it, to buy it, that can really pump up the price. And so one of the kind of combinations that theoretically, to speculate, could happen is that if sharding were to be put into place, really lower transaction fees, make Ethereum a much more attractive option for kind of not just whales, but for people who have maybe smaller bags but still want to try out the platform, then they would need to buy ETH to do that. They would have to buy it. And if there's a more limited pool of ETH, that could just, all that new demand could interact with this reduction or this deflationary pressure in supply to shoot up the price further. And the final thing that's important to consider from this perspective of these upgrades is that with ETH 2.0 will come staking, right? There's already kind of a ETH 2.0 staking system that's going into place right now where people are just locking up their tokens until the 2.0 officially launches. But then once it launches, it'll just be like any other proof of stake network where you can just, delegate your ETH to a validator or run your own validator and gain rewards for doing so. But one of the things that happens with staking is it, again, creates a friction that might prevent people from selling. If you're staking your ETH, then to sell, you have to come to the conclusion that selling is better and it is worth it to give up that yield you're generating from staking. You have to really be convinced that selling is a better proposition than just continuing to hold the asset and earn yield on it. And that just creates friction. It just makes it that much harder for people to necessarily always pull the trigger and go ahead and sell. And it just kind of reduces the amount of supply that's just readily available to be sold. And when that happens, that could again be one of these kind of supply shrinking factors where there's less supply ready to be sold, and that could jack up the price. And one of the things that can happen in an environment like that, a situation like that, is that you don't necessarily need a ton of money to really appreciate the price. I think when we look at Ethereum's market cap, it can be tempting to think that to get a 2x in Ethereum's price, you need to double its market cap. But that's not really true, right? Because what price is determined by is supply and demand. And if the supply is kind of restricted because maybe people are locking up a lot of ETH in DeFi, or they're staking their ETH, and then a lot of ETH is getting burned, then what could happen is that if there's just these sudden surges in demand that's interacting with a very little amount of ready supply to be sold, that can really shoot the price up. And so you don't necessarily need to get like a 2x in market cap. You don't necessarily need to get that much more new money, I should say, to increase the market cap by quite a bit. You wouldn't necessarily need another 500 billion or so, to increase of new money coming in to increase. It's not a 1-to-1 ratio is what I'm saying. Market cap can go up, the price can go up higher, and you don't necessarily need that much money to increase the price. So that's something that's going to be interesting to see what happens. Now, again, with all of this, it's all speculation. I think it all also depends on the timeline of all this. Ethereum has been pushing back these upgrades for quite a while. Hopefully they'll happen soon for ETH holders. I think that these are only going to be, personally, I think these are only going to be positive things for the network. And I think the sooner they happen, as well as they happen well, and they, make sure that the rollouts are smooth, only the better it will be. But really, the main point I want to bring out with all of this is I think it's way too early, personally, to say that the king is dead. I think it's too early to conclude that the time of Ethereum is done, and now it's just all going to be these alternative layer ones who are going to be taking the pie. I think that Ethereum, at least for this market cycle, still has a lot of life left in it. And if these upgrades can be implemented, it could be quite a tailwind for Ethereum. Now, I'm also not saying that Ethereum is going to always be the top of these smart contract platforms. I think anything can happen. I think it's way too early to know one way or the other what's going to happen. But certainly with these kind of things, the early big assets don't necessarily always make it to the end. They're often supplanted by newcomers that come down the line. So I'm not at all arguing that Ethereum is forever going to be the top of the line. But really what I want to argue is that I think it's too early to say that the king is dead. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.